right, this is a bonus edition right now of The Few, but we're going to call it Shine on Markets. I'm going to come to you with sort of market insights and observations on the financial markets. And Jennica, you're going to talk about the real estate markets.
I am, but I'm also going to be talking about it as a shine as well. So I think we should call it Shines on Market.
Not
it's
squared,
both of us.
like Shine Squared
Maybe.
Market. So we'll let David and Kristen, our producers, figure all that out for all of us. It's above our pay grade for sure. But anyway, let's talk about what, a lot of turmoil, a lot of volatility on my side of the investment markets, right? So you have a lot of cross currents as it relates to what we're seeing. Tariff talks are turning the market upside down. And with that is a lot of uncertainty. And the uncertainty then causes markets just to drop right now because you really can't plan as a business owner or small business owner, in the future, 60, 90 days, even 6 months into the future. So if you put on a tariff and you're a small business owner and you get majority of your, let's say, product overseas, and now it's immediately 10%, 20%, 30%. We actually, this morning, I was with a client literally on El Paseo, and she has a little shop, a dress shop, and she basically says, listen, she already talked to her manufacturer and supplier, and she has to add $10 per jean that's coming over because they're adding it on because of the tariff. So this is like a real live developing, story. And if it's just happening with that one particular small business owner, it's happening all across the United States. So this isn't easy and this isn't fun. But even on the real estate side, you're seeing sort of a stalemate, what we call suspended animation. What are you seeing?
I think it's more of just a perpetual suspension of animation that we've seen. So if you look back into last year, everybody was waiting for the interest rate drop, waiting. And this is just kind of continued on down the same waiting path. What we're kind of seeing is the hesitancy is just growing at such a rate that really the only properties that are selling are priced severely under what would normally be considered fair market value. So those are the homes that are jumping off the shelf because it's almost pressuring these buyers that have been hovering around kind of, as honeys to the honeybee hive for so long that there's only, at some point people do have to move. They can't not do that at times. And so there are different, as reasons to be investing in real estate that go beyond just wanting to have a vacation home or move to a new area. So it's kind of getting these people, if the property's priced right, it is allowing that burst to happen. So that's what we're kind of seeing. That's where the target market is right now with a lot of the buyers, and trying to get sellers to understand that people are really hesitant. There's so much uncertainty. It's a continued amount of uncertainty that just, it's almost to a breaking point.
But don't you see, like in your side, in your market, don't you see that everyone's just waiting for interest rates to drop, right? It's like we came into the new year with the Fed funds futures, so interest rate probability of the Federal Reserve dropping 4 to 5 times. And now we're back to 3, but that's the second half of the year. And obviously we got the tariff talks, but we also have, President Trump, jawboning Jerome Powell, the Federal Reserve chairman, to, through tweets, through just press conferences, trying to, insert his own opinion as to what he believes, where interest rates should be. And so you've got your buyers out there, and a lot of buyers that are waiting for interest rates. And you got the press saying it's going to happen. You got the president saying it should happen. And, what's going on?
Well, those that can will wait. So there's those that can afford to be uncertain and don't have that need to purchase a new home or purchase a different home or purchase an extra home. They don't need to do that. So what's really kind of forcing the market right now is interest rates are, although higher than they have been in the past, they're historically pretty reasonable rates. So It's not a situation of, if I can, then maybe I'll wait. So you're seeing a lot of that, where a lot of the buyers that were coming in didn't necessarily have that hesitancy. But what we are kind of seeing is that sometimes people have to move. They have to buy and sell homes. And so in order to kind of counterbalance that uncertainty, I think what gives buyers comfort is really the idea that maybe I'm going to get a good deal on the home. So my interest rate might not be that great, but if I can get this property at under market value and then allow for interest rates to drop whenever they do, I'm going to come out ahead. And so
you're going to get a great deal. And then maybe a year, 2 years from now, you can refi at a lower rate.
Correct.
And it's a win-win. I think that's where the stalemate that I see on your side in the real estate market, where I just think if and when we do see rates fall later this year, then it's going to entice a lot more. Your buyer pool then basically doubles. So that means that it's competition. It's a supply and demand issue. We're still, 2-3 million homes in a shortage relative to the demand today and the future demand.
Right.
And post the great financial crisis of 2007, 2008, home builders can't keep up with building the amount of homes that are needed in the United States today. So at some point in time, this is going to break. You're right. The buyers are waiting. And the sellers have to be realistic on their price point.
Well, there's a lot of inventory out there right now, and it's really playing into the old adage, date the rate, marry the house. So
That's good.
With that kind of in mind, people buying homes right now, if you're looking at it, you have an influx of inventory. You have so many more houses on the market right now. You have your pick. The rates will fluctuate, and then you can figure that out as time goes on. So I think it's really important. And I tell a lot of my clients, let's find you the house that you love. Let's find you the situation that works best for you right now. Because sometimes people don't have the ability to sit around and wait for, the U.S. government to figure stuff out. So with that in mind, thinking about what's going on with the real estate market, what are you telling investors?
So, investors, our clients, and any investor out there today needs to be balanced and diversified. That's a principle that we've always done from day one, dollar one. We create the financial plan and then we basically allocate their assets and manage accordingly. That being said, we've prepared for this and we've put some cash on the sidelines, treasuries. And so now we're waiting for a great buying opportunity, and we're being presented with just that. We believe that, the financial press is, and the uncertainty is making this right now, a huge opportunity in the future for the right mindset. If you have, long-term view as an investor, you're going to get high quality companies. They're earning, they're still growing, and they're still dominant in their own space. You could look back and say, oh, wait, just like in COVID in March of 2020 and April of 2020, when the market went down 30% each month, those were tremendous buying opportunities. And the reason why is because the financial markets right now are trying to get a read on what the future E is on the PE ratio. What that means is earnings. So earnings drive markets, okay? And so are earnings going to be as strong as they are moving forward from where we are? Well, the market's telling us the answer is no, because it's a future discounting mechanism. It's looking into the future and saying, wait a minute, because of this, it's going to be that knock-on effect. And oh, by the way, 80% of the businesses in the United States are small businesses. So that's going to have a knock-on and consumer effect. Therefore, if there's not that much commerce, not that much spending, earnings will come down. The question is, where is that fair market value? And that's what we're seeing, the price discovery. That being said, we're going to see this play out where you're going to want to look back and say, hey, wait a minute, this is that moment in time, because the markets are only pricing in the negatives. Right? If you turn on your news tonight or just do, a quick Google search on Yahoo Finance or CNBC.com, and you will find nothing but negative headlines. And those are the best opportunities for investors if you have that mindset, like I said before. But more importantly, what if we see later on Memorial Day or just shortly thereafter, the extension of the 2017 tax cuts from the Trump tax cuts, because Congress is currently working on that, and we will see tax cuts. And here's sort of the challenge how we got to where we are today. Trump had three things: one, deregulation, right, from his economic plan. Well, he did that within the first 10 days, if you will. The second was tariffs, and that's the second stool of what he's working on what he ran on for his economic plan. And the third one are taxes, the tax cut extension. And so he really thought, and this could be in the future, maybe the smartest move ever or a miscalculation. Time will tell.
I don't know.
Where he went for, he changed the sequencing. Right. Okay. So the first time around, he reversed those and went for the tax cuts right away. And then he went for tariffs. He did $300 billion in China. And oh, by the way, the Biden administration kept those tariffs on China because they looked at our deficit and debt, and we couldn't afford to balance a budget. Not that we do, but we couldn't afford not to have that. And China left those $300 billion in terms of tariffs on, and it continued. So we've seen tariffs before. We haven't seen the transparency that we're seeing or the mess of the rollout. I mean, we're watching real-time negotiations play out like it's a reality TV show. So I think that's where the financial markets and everyone's like really, trying to get their head around this. So I think when we're going to see is, the tariffs will settle down. And oh, by the way, we're not going to have 2% tariffs like we went into the new year with. We're going to have maybe 10% tariffs across the board, and maybe one or twos. Maybe with China has something sort of a different deal, if you will. But that's a future positive. We're going to see the tax cuts continue. So he wanted to go for the tariffs to say, oh, wait, I got $1, $2, $3 trillion, right? Going from that 2% to 10% in terms of what the United States is just trying to get, an equal and fair sort of deal out there with regards to global commerce. And that's really not a fair, ask. That's a fair ask. It's not a, something that shouldn't be. And then you can go to Congress and say, oh, by the way, you're going to give me those tax cuts because I gave you, I already picked up half the bill by bringing in all this tariff money.
So ultimately, I think what we both tell both sets of clients is, trying to taste the cake before it's done baking. It's probably not a good idea.
Stop checking the oven.
Stop checking the oven. You're going to mess up the cake. So, the knee-jerk reactions and the sky is falling kind of mentality, kind of have to sit back and be patient and kind of see what happens with the world, because regardless, it's going to keep spinning and people are going to still keep living and keep having to move and keep having to invest their products and keep starting their businesses and, growing their income. Life will continue. So it's just a matter of trying to be patient, understand, that there is a process. You may not understand the process, but hopefully, as time goes on, it'll settle down and people will gain more confidence.
So in your market, it's a buyer's market. So, and there is the opportunity to strike and get a pretty damn good deal if you're being proactive and you're in that position and you want to. I wouldn't wait, right? That's what you're saying right now.
I wouldn't either. I think the challenge that we're facing, though, is to get into the mindset of the seller. So, in every transaction, it's a two-party deal. So, yes, that's what buyers are asking for. And, I always tell my clients, when you list your property, your clients will tell you what your home is worth. My client, the buyers will tell you what your home is worth. We can sit here and we can analyze and we can look at home valuations and we can judge basically what's sold in the past and kind of look at those calculations and make an estimated, intelligent, educated guess as to where we think the market value is based on all that information. But ultimately, buyers tell you what they're willing to pay for your home. And so depending upon the situation in the world, depending upon tariffs, depending upon interest rates, a lot of that comes into play. So what buyers are telling us is we want a deal. And sellers have to get out of that mindset of saying, yeah, but my neighbor 6 months ago sold their house that's just like mine for this. Well, that's great, but it's not 6 months ago.
Yeah. Changing dynamic, changing market.
We keep checking the oven.
Yeah. And the Zillow effect is awesome. Always looking at the highest and best and thinking,
sure,
well, your baby's prettier.
Mm-hmm.
Right?
Everybody thinks their home is the prettiest.
Yeah, for sure.
And it is.
And on our side, I think markets aren't pricing in good news. It's pricing in yield to worst or worst case scenario. So once we get to sort of a price discovery, once we get through this and get some clarity, and then you get down the road, second half this year, we could see interest rates and monetary policy easing. That's going to make more buyers come into your market. So
I just wouldn't be too confident with the idea that you're going to get away from negative. I mean, just being in journalism and being in the news industry, the old adage.
You're saying that the 6 o'clock news, if they're going to change the story tomorrow night, it's not going to be a positive story. It's going to be running with.
Well, I will tell you, if it bleeds, it leads. Okay. So that is a number one thing.
You guys, is that the journalism 101 first day?
Absolutely. I've never seen more giddy people over terrible news in my entire life so far. So don't look towards having the news be able to tell you good news, because nobody wants to hear the story of, your neighbor's cat didn't get run over by a car. They were rescued. Big deal. That doesn't sell newspapers. It doesn't sell ad space. It doesn't collect eyeballs.
Interesting. No clickbait.
It's all going to look bad. So be able to read through the lines, be able to have advisors, be able to see people and connect with people that ultimately know how to see the forest through the trees and be able to differentiate what's really happening versus what they're telling you is happening.
That's sage advice. All right. Well, Jennica, thank you for joining us on Shine on Markets. We talked about real estate today. We talked about the markets, stock market and sort of the everything market. So whatever we name this, whatever this becomes, we just thank you guys for watching the Few podcast. This has been a bonus edition. I'm Robert Schein with Jennica Schein. And thanks again. Don't forget to like and subscribe and share to somebody who you think will benefit. Thanks again.
This podcast is brought to you by David Field Producer. It is produced and directed by David Field and Kristen George. And it's mix, edit, and socials by Kristen George. Blanky Schein Wealth Management is a group of investment professionals registered with Hightower Services, LLC, member FINRA and SIPC, and with Hightower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through Hightower Securities, LLC. Advisory services are offered through Hightower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanky Schein Wealth Management and Hightower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanky Schein Wealth Management and do not represent those of Hightower Advisors, LLC, or any of its affiliates.